Good afternoon or good morning, depending on where and what time it is where you are. I'm Paul Hickman with the Arizona Bankers Association. We represent all of the banks that are FDIC insured in the state of Arizona. We represent approximately 150,000 financial services employees or bankers throughout the state. And we are proud to partner with the Arizona Commerce Authority to help ease the economic burden COVID-19 has placed on Arizona's businesses, workers, and families. I encourage you to visit the ACA's COVID-19 website for the most up-to-date information on available financial support programs, workforce assistance, manufacturing, and more. Today, we're going to discuss a crucial component of the CARES Act, which was signed into law at the end of last month. The Paycheck Protection Program allocates $350 billion to small businesses throughout the country. We have two of the most seasoned and experienced bankers in Arizona to walk you through the parameters of the program, as well as the actual path an eligible borrower and his or her loan takes from application to funding. They are AZBA's current chairman, Jack Berry, the Arizona Region Chairman and CEO of Enterprise Bank and Trust, and the AZBA's former chairman, Mike Thorell, president of Arizona Federal Credit Union. But first, I want to provide a little bit of broader context on the CARES Act. The CARES Act is phase 3 of what will be at least 4 phases of the federal reaction to the pandemic. And the CARES Act is essentially a $2 trillion stimulus package. It was passed into law at the end of last month. It allocates funds for economic relief programs, which include tax changes, credits, and loans. And it's broken down into roughly 6 or 7 broad components. One, direct payments to individuals and families. That's $1,200 to those earning up to $75,000 plus $500 per child. That phases out about $100,000 in income. It adds an additional 13 weeks of unemployment insurance, extending those payments to freelance and gig workers. The Paycheck Protection Program is a significant component, which we're going to discuss in depth in just a moment. It's got an economic stabilization fund valued at $500 billion, which is a government lending program for distressed companies impacted by the crisis. It allocates $100 billion to frontline hospitals, $150 billion to state and local governments to ameliorate declining tax revenue. And finally, it offers a broad variety of tax breaks, deferments, and incentives for individuals and businesses of all sizes. Now, let's move into a more in-depth discussion of the Paycheck Protection Program. Jack Berry, why don't you and Mike take it from here in describing the rules of the road and the process?
Thank you, Paul. Hi, my name is Jack Berry. I'm pleased to offer this information with respect to the Paycheck Protection Act to all members of the Arizona Commerce Authority and other important businesses throughout Arizona. Let me describe what we'll try to cover in our program today. We will hopefully address the following questions. Who is eligible for this loan? Because there are eligibility requirements. The important question of how much can I borrow, because it is a loan. The third is, what can I use the proceeds for? Are there limitations, in other words, and we will address that. The fourth is, well, what are the terms of the loan? And we will address that. And finally, perhaps even most critical, as I understand some of this loan is forgivable, how much is forgivable, and how do I make that determination? So we'll cover those items today. As Paul alluded to, there is a substantial sum of funds federally that have been allocated to this program, $349 billion. As I speak today, there is discussion of increasing that amount that Congress will address in the coming days. And candidly, the process by which the government wanted to provide the relief for businesses and their employees, particularly their employees, was through a program under the Small Business Administration called 7A Lending Authority. It's a well-established program, it's been in place for decades, and it was a means by which the 5,500 banks and credit unions throughout the country could administer the funds to the businesses themselves so that those funds can get to their employees and their families. You'll see a mention of a covered period as you think through the process and what is eligible. This is an important concept in that this program is intended to be a bridge. It's a bridge to get through the health crisis, through the pandemic. Whether it'll be the right time is to be determined, but that was what was established in the legislation. So it begins on a look back period of February 15th of this year and expires at this time and sunsets on June 30th of 2020 as Congress takes up the measure to determine if there are additional funds necessary. Perhaps that sunset provision may be adjusted too. Next. So the question is who qualifies and who's eligible. And I want to remind everyone that this program has been very fluid. The SBA has issued, and the Treasury have issued joint guidance to the banks to determine the rules that Congress has set forth. And there's been clarification of those rules and some changes even after the passage of the act. So please be mindful that some of this perhaps has changed or may change, but these are the large items of the program that I think will be helpful for you as a business owner or as a sole proprietor or an independent contractor about your eligibility. So we'll go through these. I think some of these at this time are pretty well known. You have a requirement to be in business by February 15th of 2020. So if you're in business and any of those constraints I mentioned as an employer, an independent contractor, or self-employed on that date, there's eligibility. And with respect to employers, if you have less than 500 employees, you're eligible. Your employees, obviously, we're drawing compensation in the form of salary or other means, and we'll talk through that. And if you're a nonprofit organization, and this is something that the federal government has changed, the SBA has provided guidance. If you're a charitable 501c3, and now even if you receive Medicare payments, you're eligible. There was a provision early on that if you didn't receive Medicare payments, you were not eligible. But if you receive Medicare payments now, you're still eligible. Beginning on Friday, April 10th, there will be availability for independent contractors and self-employed to apply. All others were eligible to apply beginning April 3rd. There is largely a limitation on nonprofits beyond 501c3s, although there's further guidance on that, and I would encourage you to speak to professional advisors such as attorneys or accountants if you have a nonprofit and you want to determine eligibility. I think the 5 points right of this slide are important in that these are really the permitted uses under the legislation. And there is a sense of adherence to this is important. Borrowers are certifying that they will adhere to the rules. Borrowers are certifying that the information provided is true and accurate. And the banks are the conduit to get the process through the system, but it's the borrower's responsibility to follow the rules of the loan eligibility. So you may use the proceeds for these 5 items. We'll speak more to this in a minute. Your payroll costs, which is really a critical one. Rent that you may owe under lease agreements. Utilities to operate your business. The mortgage interest portion of mortgages tied to your business premises, not principal, but interest. And finally, if you have interest on other debt that you incurred in your business before February 15th. So what will lenders not require? And these are 3 important things as you think about the ability and the desire and the need to borrow. One is there's no collateral requirement. Unlike other SBA loans that you may be familiar with in the past, there's no collateral requirement for this particular loan program. There's also no requirement for personal guarantee. So know that you won't have to provide personal guarantees for these loans. And finally, unlike other SBA loans where there are fees borne by the borrower, there are no direct fees to be paid for this program.
Hey, Jack, real quick. when you talk about permitted uses, and one of them was payroll costs from that last slide, that includes bringing furloughed employees back, or employees that were severed, bringing them back, correct?
It does, and I'm going to speak to that in just a minute, Paul, when we get to the permitted uses.
Okay, sorry, didn't mean to preempt you.
That's great. So how much can I borrow? This is an important aspect, and I know for many, there's been some confusion around this category, but know generally that it's, if you're a business and you have employees, that's your average monthly payroll costs. So your average monthly payroll costs, which include, and I'll go through some of this in a minute, healthcare benefits, retirement benefits. And if you derive your monthly average payroll costs, use either the last trailing 12 months or 2019 calendar year. The SBA has provided guidance that you can use either. And you then multiply that by 2.5 times, so effectively 10 weeks. And provided you have a cap on that value of no more than 10 million. And so we'll talk a little bit on the next slide about what's included in the payroll cost and what is excluded, so you can get your net payroll cost number to determine your loan amount. So this is some general information. Again, I would encourage you to speak to your professionals about more specific questions. But in general, it is all compensation that an employer would pay to an employee, including salary, wages, could be hourly wages, could be part-time wages, commissions for sales individuals, and other similar compensation. So that is included in employers' calculations to determine the payroll costs. For sole proprietors, independent contractors, and self-employed individuals, the some of the payments of compensation or income often reflected on a Schedule C, sometimes reflected for services rendered on a K-1. If you're a self-employed individual working for an LLC, you may get a K-1 for your services that are rendered. All of which is limited to 100,000, which I'll speak about in the next slide. So if you're an employer, any of the others, you will determine that gross amount. Any individual that exceeds 100,000 on an annual basis, any of the remuneration over 100,000 would be excluded. So you would only count the payments up to 100,000. If you have included in your cost of wages the portion that is the federal FICA withholding, that is the employer responsibility. So know that employees pay into Social Security around 6.2%, and employers match that. The matching is not to be included. So if you've included it in your gross, you need to deduct it for the employer portion. There was also, as Paul referenced, two early parts of the relief program that Congress established. One of those was to encourage employees to be able to work from home, to be socially distanced, to help school children who were no longer in school. So they offered in one of the early programs a tax credit for the wages that were represented by that leave. You can also apply for those wages through this program. If you apply for the wages through this program, you're not eligible to take the tax credit. So you can't have both. You don't have to, if you have applied for those wages and you intend to take the tax credit, you need to deduct those out of the gross. And then finally, if there are wages in the gross level that include employees outside the United States, you need to deduct that from the total. What are the terms of the loan? And you'll see one of our items here has changed since this slide was created. But all loans will be for a 2-year maturity, 2-year term from the date of the loan. The interest rate will be fixed, but the interest rate is now 1%. The U.S. Treasury modified the original suggestion of 50 basis points to 1%. So know that it'll be a fixed rate of interest for 1%. The loan is fully amortized over 2 years, but on the last bullet point, you'll know that, or you should notice that there will be no payments due for the first 6 months. So payments won't start until the first 6 months. And the loan may be prepaid at any time prior to maturity without penalty. So know that that can happen. We'll talk in a minute about what portion of the loan is forgiven. And as such, the amount of loan remaining may be zero or a small sum. So let's talk about loan forgivability. So loan forgiveness. Loan forgiveness will require the borrower to present information to the bank after they've provided an 8-week period of payroll to their employees. You'll recall that there were 5 eligible uses of the proceeds. However, only 4 of those uses can qualify for forgivability. They were the first 4 that I outlined. One was payroll cost, the other was mortgage that was incurred in the business, rent for the premises, and utilities. So if you use some of the proceeds to pay other debt, which was permissible, that portion of the proceeds would not be forgivable. The other critical part of forgivability is that at least 75% of the loan amount should be directed to payroll costs. If you direct less than 75% over the 8-week period for payroll cost, you will end up losing some of your forgivability. There'll be a mathematical formula that if you do not have at least 75% directed to payroll costs, some of your loan will not be forgivable. Also, if you do not sustain the payroll level that you had at February 15th to at least 75% of that over the 8-week period, in other words, if you lower the pay of your employees so great that you don't maintain a 75%, that will impact forgivability too. So those will be important considerations. And candidly, the program is directed to provide for your employees and their families during this difficult time where they otherwise would not have access to payroll. And this is a measure and a means to provide that. If an employee is, if you're a restaurant, for example, or a hotel where you really are not available to the public today and you've been closed by direction, those employees can be called back, as Paul asked earlier, and can be placed on the payroll. I realize they may not be physically present in your premises. Perhaps you can have them work on other things. Perhaps if you're a hotel or a restaurant, you can work on design factors for your business, on offerings that your business may have, strategic plans for your business when you reopen. They can still conduct work, but you'll need to have at least 75% of your employee base. Your employee base is determined on February 15th. So if you had 100 employees then, you'll need to have at least 75 employees through the 8-week period. It doesn't have to be the same individual as long as the head count matches the numbers that were on February 15th. I'm going to ask my colleague, Mike Thorell, to comment now about how one may be able to take advantage of this program and what banks and credit unions would participate and what's the best course to proceed. So Mike.
Thanks, Jack. One of the things I wanted to touch on, and as we noticed just from your slide presentation, the program itself continues to be an evolving, fluid program. And for most business owners or those considering the program, they're running concurrently with the financial institutions that are implementing the program. So there has been to date a slight bit of frustration that the financial institutions that are implementing the program are things are going a little slow, or things aren't going as fluid as they would smoothly as they would like. Recognize the fact that we get information on a daily or hourly basis on how the program is evolving and changing. And you can see that by evidence of some of the slides that have changed just since preparation. Second piece I'd give to you is we've heard from folks here in the Valley that some of their banking relationships have are unable or are not able to assist if you're not a current client. The suggestion I would give to a small business owner that's run into this issue, reach out to other financial institutions, referrals that you might have, where an institution might be willing to accept somebody who's currently not a client or a member of the financial institution. Recognize the fact there's a compliance element to this program relative to the Bank Secrecy Act, as well as know your own customer, that may put you behind or a little bit slower in the process. But as the expansion is being considered by Congress, hopefully the panic of the program running out of money will alleviate some of the concerns that would put you in a program that maybe it's a little bit slower than it would have been had you been working with an institution that you had a current relationship with, that maybe puts you into that process. So I would encourage the small business owners to look around and certainly ask for where you might fit, even if you don't have a current banking relationship with an institution. Last thing I might touch upon is just the process in which this goes. Most all of us have just recently developed an online portal on our websites to be able to take applications. The application is fairly simple. The documentation, albeit the presentation might overwhelm a few. The documentation to support the application, again, is fairly simplistic relative to other loans you may have applied for. From there, really the burden has been thrown back onto the financial institution to allocate and authorize funds for the loan request and move you through the documentation process for a quick funding. A little suggestion, particularly for those that don't have a relationship with an institution that is processing the loan under the program, I would quickly get yourself into a relationship of opening an account for the entity in which you wish to borrow. That too could cause some unnecessary delays at the end of the process, and we would like to avoid as much frustration as possible. Jack, I think that covers the items that we had talked.
Excellent. Thank you, Mike. With that, I'll ask Paul Hickman to sum up what our industry is doing to approach this and how important it is that we understand that our clients and our business owners throughout the state have a need for these funds, are seeking relief, and the Arizona Bankers Association is committed to providing that. So with that, Paul, I'll let you close.
Sure. Thanks, Jack, and thanks, Mike. This is very informative, and I appreciate it, and I greatly appreciate the ACA, the Arizona Commerce Authority, continuing to provide resources on all of the stimulus programs that are available to individuals, consumers, and businesses of all sizes out there. There's just an overwhelming amount of information and programs and avenues to provide relief. This isn't the only one. I underline that. The Paycheck Protection Program is a big piece of this, and it's, as I think Mike pointed out, it's about to double in size, we believe. Maybe over the weekend, a little under that. It's projected to go from $350 billion to $600 billion. One other thing I would point out is the Federal Reserve is opening a credit facility for the financial institution to transfer this paper to. And that's a little bit inside baseball, but what it means for the borrower essentially is you've got more time, and more institutions will in all likelihood accept more new customers because of that. But I would encourage you also to look at the EIDL program, which is an acronym for Emergency Injury Disaster Lending Program, which is a SBA program. You can get up to $2 million. The rates are higher, but if you apply for a PPP loan, you can finance the EIDL, the unforgivable portion of the EIDL loan with that. The critical distinction is that the EIDL loan has to be applied for directly to the SBA, so check that website. I hope we haven't gone on too long. I again encourage viewers to visit the ACA, the Arizona Commerce Authority website frequently, because they have done a really remarkable job of deconstructing these programs, making them approachable and easy to understand through their web resources. So thank you to the Arizona Commerce Authority. Thank you to Jack Berry with Enterprise Bank Trust. Thank you to Mike Thorell with Arizona Federal Credit Union. And we hope everybody stays healthy, happy, and safe throughout this once in a lifetime pandemic. Thank you again.